The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We got the indices a little bit mixed today, and had some nice trends in the morning, and then just, sort of slowing on down, being a Friday afternoon. And we got the S&P right now down 5 points. The Russell's down 5. NASDAQ is currently up nearly 8 points on the day. We have the Dow down 63, and oil is down $1.10. Natural gas is down over nearly 2% on the day. Big mover right there. We got corn down $2. We got soybeans down $1.75. Euro dollar currently down 6 with Aussie dollar up 2. Pound dollar is currently down a whole 11 pips. Dollar CAD is up 5. Dollar franc's down 14. Euro yen, all the yen pairs are moving today, even though most of the other pairs are pretty slow. We got Euro yen right now is down. It's like $1.39, 1% on the day. Pound yen down $1.77, down over 1%. And US yen down $1.16, over 1% as well. Down move right there across the board. So the yen just getting stronger and stronger. Let's look on over at gold. So gold right now is currently down 9 points. We had a great short gold trade called this morning with me and Tommy O'Brien. We were looking at gold, and we were looking at possible setups for it. We had a target, and I did a premium collection trade. Tommy did a spread trade. Both of us knocked it out of the park. Went even further than we thought it would. Flew down there. And but gold right now currently down 9 points from yesterday's settlement. We got silver down over 2% on the day. Copper, the big leader and champion of the day, down 2.5%. So massive moves over there on copper right now. All right, so let's look at what news did we have come out. What news do we have coming out next week, so you can start getting ready for what's coming on up. All right. Well, this morning we had, really nothing major, just the revised University of Michigan Consumer Sentiment Report. That came out at 9:55. And like I said, isn't really something that I watch to go, oh, wow, that's just going to rock the market. Not necessarily the big mover that you'd be looking for. But let's see here. Give me 1 second. I'll pull the chart up, and we'll walk through it. We'll look at it and see if we see, was that correct? Okay, it doesn't move much just on that 9:55 report. And we see, right 9:55. Let's go down, I guess, 5 minutes, right? Because it's a 9:55 report. And so right here, we can see we got to move up by about 10 pips. And we got to move down, see, 95, so 30 down to by about 30, 40 pips. So we got a little bit of a move. I'm looking for 50 pip or greater moves when I'm doing Forex trades. Now, one thing I can tell you, one thing I'm starting to notice, so here's a tip for you, okay? So if you're a binary trader, I'm really starting to look at the possibilities of doing really cheap strangles, okay? I'm talking like $20. Strangles, even on low-impact news reports, when you have a news report that comes out like 5 minutes before expiration. Okay? Because it'll be, obviously, very cheap. And so you get in on this trade, and what do? You put on like a 98.40 by 98, say 20 trade. The thing comes on down here, goes down to closes at 98.13 before it's all said and done. And so you could have had, a nice, really a nice strangle on there, put up $20 and made like, $80 on the trade. And it's a trade really like I'm putting on and probably not closing. All right, I'm probably just leaving it on. And if I can get out at a good profit, I may take it off. But it's one of those trades where you can get it on so dirt cheap. And, if you can get one that's, pretty balanced right there at the strike, like a 40, 20 type thing, then you could get a pretty nice strangle. Would have worked out really, really well. So keep an eye out for those trades, and that's something I've thought about a few times. We don't see them that often. Usually you don't have like a 55, news report, like a 9:55 or 11:55 or whatever. But when they do come up, it's something that is worth, looking at as a potential way to strangle the news. So that's just something that I'm going to start adding to my roster as a strategy I want to start testing out more and more. But it does make sense that it would work because there's no time premium in them at that point. And usually those would be worthless binaries. You wouldn't even attempt to trade them. But due to the fact that you do expect volatility, then you go in there, like at say 9 o'clock, or not 9 o'clock, like at 9:50, all right? And then you put the trade on like right before then. And so you put that trade on, 10 pips up, 10 pips down. If you get more than a 10 pip move in either direction by expiration within like 10 minutes, then you have a great trade on a really low risk. All right, so just wanted to add to the roster. And, I honestly didn't even think about it this morning. But it's one of the, I look at it now and I'm like, man, I should have been looking at that because I thought about it last time. So I'm going to put it on my calendar for next time. And so what is next time, right? So that's one thing you always want to know. When's that next release coming out? It's coming out on August 30th. So I'm going to add that to my news. I have a calendar I keep on news. So I'm going to add that to my August calendar for August 30th to go in and look at potentially doing a strangle on something like the U.S. yen or whatever currency pair, really. But like the U.S. yen on the University of Michigan Consumer Sentiment Revised Report, because it comes out 5 minutes before the 10 a.m. expiration. So it'll give me a pretty cool trade. So there's a free bonus for you. You can do it monthly. So let's see what else. And it doesn't take much for it to move like 15 or 20 pips. I mean, that's just not a surprise when that happens. So, I mean, you got, the trade comes out, you have a full solid 5 minutes of that news to be able to get something out of it. And so it could work really, really well for you. All right, so there's your freebie of the day. And let's go over here. Let's look at, what do we got? Sunday. We got retail sales coming out of Japan, so get some yen volatility for you nighttime traders out there. I usually don't trade on Sunday night. I am chilling out with the family. But we do have that report coming on out. And let's see what else we got. Now, by the way, with that, you could possibly have like the 8 p.m. spreads. So you could look to, this is sort of a similar trade to what I just talked about. You could possibly do a straddle on the retail sales if you can get it in cheap enough. So if it's really cheap, and you can get it in like, say, at $7.45 or something, and you can get it in for, say, less than $20 or so, then you could have a good straddle. You wouldn't have a strangle, unfortunately, because no spreads or no binaries expire at 8 o'clock. But that could be a trade to check out. Now let's roll on around. Let's see what else we got that's coming out. And there are multiple trades like this, by the way. So you have another one on Monday. Japan has their preliminary industrial production report. So that's another possible really short-term news straddle. I mean, we're talking 10 minutes, and the only reason you consider it is if you get it like right at the strike, like right there, you can straddle it perfectly on the spreads, and you can do like 5 minutes before expiration. So sort of a cool trade to look up. And what else do we got? We got Monday, we're going to have net lending, we're going to have M4 money supply, we're going to have mortgage approvals all coming out of the pound at the same time. They're all minor, medium impact reports. Don't expect a big move off of that, but we should expect a little bit of move. And then at 6 a.m. you'll have realized sells out of pound. Again, not a major mover, but that will cause a little volatility in the pound, making a decent trading instrument for the day at least. And then we're going to have pending home sells coming out 10 a.m. That should be a market mover. So definitely have that one on your roster. That comes out at 10 a.m. on Monday. And let's see here. New Zealand will have building consents. I wouldn't really worry about that too much, except for it could spill over a little bit into Australia and affect the Aussie a little bit early. And then Japan will have household spending, unemployment rate, which is a very low impact on Japan. And I know it sounds sort of odd, but it is actually a very low impact report. And let's see here. They have, how do I put this? The reason is it's a lot more, their economy is a lot more on industrial like sales than it is on personal spending, meaning they make most of their money from money coming in versus the people in the country spending the money. Let's see here. The Bank of Japan Governor Kurata is going to speak as well. Now that isn't a moving event, and it says tentative, but one of the things I've learned is I just look at the last several reports, and I go, what time does this usually happen? And if I usually look at the last, say 3 to 5 reports, you can pretty much know when that's going to happen. So we got 8:30, 235. That's a little bit off. 8 o'clock, 11:50. All right, well, that one, wow. I mean, he is all over the board. All right, so that one is super tentative, meaning we have absolutely no idea. Because usually you'll see a pattern. You'll see like 4, 5, 6 times where he speaks at the same time. This one's just totally random. So he's doing some branch manager meeting or something like that. But anyway, so yeah, I would definitely just be aware that at any time he could be speaking, so be watching any possible news plays that could come up off of that. And now let's go in and let's look over here at gold. So we got gold coming up, we got silver coming up. See if there's any possible trades we might be able to take advantage of. And right here, going to go on down, we're going to pull up our gold and silver contracts. We're going to put in our risk parameters, we're going to make them. So I got it live here, I got 10 contracts that I usually do. Sometimes I do more, sometimes I do less, but 65 to 95. I'm going to bring down the expiration. I just want to see the ones that expire here in the next half hour. Both directions, because I can just see everything that's available. And I got gold and I got silver coming right on up. So let's see here. If we look at a gold chart, all right, so we'll pull that up. We'll switch this one over and make it a silver chart. Right there. And then, now that we got that, let's go in and turn that off. Then I can make a couple settings here. Makes it easy to watch both of them. And looks like silver's moving on up, so we got a 19.75 trade that we can take advantage of. So I'm going to grab that one right now. And about $85. So that was a nice trade, but you had to really be ready on that, man. That's why, I don't know if you saw it when I first pulled it up. It was right there. And, wow. I mean, the metals are just moving on up right now. And let's see, on gold, you got a 13.22. That's pretty close. And it's popping in and out quite a bit. So you'd have to sort of keep it up there, see if you see something that's going to move for you. Even 13.22 is having a hard time keeping up. But that's, right now, that's the only trade you got. But you may get another one if it pops down a little bit for you. But that's really your closest trade right now, 13.22. A lot of volatility built into that trade. So that you can do. Let's see here. And so looking at that one as the main trade. Trying to see if we might get one that, I saw 13.19 for like a split second. But yeah, it's really not pushing on that one. But 13.22 is like the closest one we got. So keep watching it. We'll see. We got a few more minutes until we have to worry about it. So, all right, we'll be right back after this break.
Says you can't take it with you. TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, here we are right here on the Diagnostic Trading Hour. So, silver, we never got that fill on that. It was never far enough away. We only had 3 ticks, but it's moving down. We might get another one if there's enough time. Just trying to see if we get one that might work. 1322. This did not take off enough. Remember, we want to try to buy those things for around $80, right? So we're trying to get them far enough away where we're getting a price of around 80 to buy them. I mean, it was like at 60, 70, maybe 75. We weren't really able to get the $80, $85 fills. So we'll see if we get it. Looks like silver. We're not going to get anything right now. We're in the last 2 minutes. That one's not going to work out. And then we're going to the gold. We basically just didn't get a trade. So you want to make sure you get that trade. Make sure it meets all your parameters, all your requirements. And the silver one was looking pretty decent. We just didn't have any distance, right? So, think about what were we on silver? If you go in, what price were we looking at? And we were looking at the price of, let's see, what was it? 19.8 was the only contract even available to us. And which means we're like, 3 ticks, 4 ticks away at any given point right here on silver. So obviously it's going to cost a lot more than we'd want to be able to, have to put out there in order for that trade to be profitable. So really just didn't get a great setup. Waiting on a good one for gold. But even gold, we're getting 1322s. We're not getting like 1324. You got to have some room to allow these things to move. Okay? But anyways, when you go in here, when you're doing it, just make sure you have the room to let it move. Like 1322 could be great, but there's no distance to allow that trade to actually make money right now. And I mean, right now it's at 1321.9, 1322. So just make sure you have some distance in your trades. You know, ideally I want at least 5 ticks. I prefer to have as much as 10 ticks if I can get it on there. Depends on how close. The closer I am to expiration, the less distance I have to have. The further I am from expiration, the more I have to have. And so, you know, if we can get into this 1322, we can get in, you know, at least 5, ideally 10 ticks away for around, you know, $80. Then that can be, you know, a really good trade. But you can see right now we're still having a hard time getting there. It's staying like right in that $60 to $75 range. And I put the 65s on just so I can see them, not because they're my preferred trade. We are trending up on gold. We're sort of trending up on silver. We had a spike on silver, but we didn't necessarily have a trend. Notice how it was going down, and then it came back up. And we had like basically one bar close, I guess 2 bars closed above the ADMA, but only one bar had its open above the ADMA out of those 2 bars. So whereas on gold, we are at least getting a consistent uptrend. We're getting, you know, 1, 2, you know, 2 bars up. The third bar, it's closing down a little bit. So, but we're really like, I mean, you need like a 1320 or 1319 to really be comfortable in this trade. If you're doing like the 1322s, you're going to be sweating pretty intense going into it. And that's definitely, you know, the strike I would love if we could see like a print of like 1323. So if we could get like a 1323 print, I'd be all about that 1322. If we get 1322.5 or 6 maybe at this point, because we're only a few minutes away, then that could be a great trade. But right now, I mean, you're just on the line and sort of putting it all on the line, and you just don't know what's going to happen. I mean, just one tick in the wrong direction and you're toast. So I think right now you can get in it for, what, like 50-50 basically. So, yeah, so there's a few trades that are popping up like right at the last minute. People trying to get out of trades. We're actually seeing now like non-market maker quotes that just came in. So these people trying to like sell out of a trade for $25 or $10 or, you know, the 1315.5, that's saying that I say it will be below 1315.5. That's not a good idea because that's a long ways to go. There's no reason to sell that. Somebody else is trying to sell one down here for 10. That's just ARB. Basically, what they're trying to do is they're trying to buy it for $25 and seeing if anybody is unintelligent enough to take it. That's basically what that trade's about right there. Okay, I have no idea why anybody would touch that trade. So maybe it's a take profit they have in. I don't know what it is, or they're just trying to fish. And so don't get caught by hooks of like, wow, what is that? You know, this is saying like gold would have to be above 1345.5 for you to be profitable. If you're right, you make $30, but there's absolutely no reason to do that trade at all. And so I see this stuff happen all the time, and I just don't want people to get, you know, just totally, you know, hosed on these types of trades because they do them incorrectly. And anyway, so that basically gives you a good summary on how to do that and put those pieces together. Also, make sure you're watching the right contract, okay? Notice they're on August futures, okay? So they're still on U3, and so you want to make sure you're looking at the right market when you do this. Otherwise, you could be seeing like time and sell prints and stuff from the wrong contract and really get thrown off. All right, y'all stay right there. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. So we didn't really get any good contracts. They were all too close. And so, to line up, I'm always trying to teach the strategy and help people out on this strategy. I'm looking at diagnostic bars, so like a Renko bar. You can probably get access to those. And then velocity. I'm looking at velocity, like how fast is it going. I'm looking at things like market noise, which is a really cool, just a cool indicator I like to use. But the biggest thing is you gotta look at trend more than anything. Okay, 8-period moving average, like on 5-minute bars or whatever. I usually don't look at lower than that because, you'll get too much chop, it'll confuse you. You'll end up going the wrong direction. I really like 5-minute bars being the best. We had a good uptrend on gold. So now it's like, hey, sweet, there's an uptrend on gold. I can also see on the scanner, hey, there's a buy. But then I look at it and I'm like, the market's at like 1322.2. And it's telling me I can buy a 1322 for like 60, or $70, and that's 2 ticks away. It takes nothing for the market to pull back. Obviously, 2 ticks within a couple minutes. It can do that. Obviously, it can do points in minutes, but there's just not any wiggle room in that trade. As soon as I'm in, I can be out of the trade, and so not really the best way to trade those if they're too close. So you got to have some distance. And as far as how much, that's just personal. Sorry, it's not always, spelled out black and white. But, as a rule of thumb, I like to have at least 5 ticks. So it doesn't mean I'm going to take it just because it's 5. I'm going to look at, all contributing factors. How solid is the trend? How much time do I have until expiration? Different things like that. How much money am I getting for the trade? Do I see, volume pushing in that direction? Do I see market noise going in that direction? Does the time in sales, is it ticking up? If I'm looking at the DOM, do I see a certain level, an order flow that's in my way? So, I'm going to look at different factors, and that'll determine how far away I'm going to get. So it's not just as black and white as this far away, but pretty much all factors considered, at the minimum, I guess you could say a rule of thumb could be like 5 ticks. And so that ought to be something that should help you out a little bit. And so that way you don't just go in and grab trades that are just really, really close. And usually I'm going to probably be getting somewhere around to $80. Every once in a while I'll pull off a 75 or 70, but 90% of the time, it's like 80, 85, sometimes 90. It depends on how much implied volatility is in the market, okay? So the implied volatility will actually push that further away for you to help you out, okay? And then, so now what do? No trades. All right, no problem. We got 21 expirations a day. We just knocked out 2 of them on gold and silver there. And so we can look at other upcoming expirations. We're going to have 2 o'clock coming up. And you can pull this up. You can actually look at it and see, what's coming up. Well, that's 2:15. So once the 2 o'clocks are done, you got 2:15s over on ags you can check out, okay? And then when that's done, you got your energy sector. You got 2:30s coming up that you can do on oil and natural gas. So literally you got you got your copper that you can go in. You can do, obviously it has nothing left on the list. But then you go and you do silver. Then you can do gold. Then you got 2 o'clock, which is like half the markets, okay? 3/4 of the markets. And then you got your 2:15s over on your ags. Then you got your 2:30s over on natural gas and crude oil. And, you can even go in and say, I only want the one for the next 30 minutes. But if you click them all, the problem is then it's, you're going to have to be scrolling like crazy trying to find stuff. So I like to sort of just know what's there and then just show on the chart, what it is that I want to trade. So if I know, okay, 3 o'clock's coming up, that's going to be my next, or 2 o'clock coming up, that's going to be my next expiration, then I can choose the markets that have 2 o'clock expirations. Notice corn and soybeans don't have 2 o'clock expirations. They just have 2:15s. So when 2 o'clock's up, it's pretty simple. I'm going to flip straight to ags, okay? When ags are done, I'm going to flip straight over to energies because I got 2:30s. So you can just do these like one after the other. They only take 5 to 15 minutes to do the trades, but you can actually have this little lineup going where it's like, all right, copper, silver, gold, then go over to your 2 o'clocks, then go into your ags, and then go into your, energies. And you just flip from one to the next. So anyways, on energies, on all these right here, we can go in, and those are going to be our 2 o'clock expirations. And then we can get ready, about 15 minutes before, we'll start looking and seeing what trades might exist that could work out well for us to put on. And you'll just pull up your charts. And the nice thing about this is I don't have to monitor 20 charts at once. I monitor what charts have potential setups. So I'm like, okay, well, I see there's a sell on CAD, so I can pull up CAD, USD CAD. If the market looks like it's trending down, great. If not, and I don't like it, then, I can just get rid of it. Just shrink it like that, okay? So that ought to, help you out quite a bit as well on doing this. Let's see here. Trying to go in, and we'll see if there's anything else. But I think there's a whole lot more. So let's go ahead now and just focus over on what other reports coming up. We had to do that just to knock out that trade. But what other reports are coming out that we might be able to take advantage of this coming week? What are the ones you want to be focusing on this coming week? We're going to have building approvals coming out on the Aussie dollar, so that's usually a pretty high-impact report. Expect 30 to 50 pips. I'll get the exact stats. We'll get those ready for you by Monday. And that'll be your Aussie report. Also, you're going to have the RBA governor speaking that night. So, so that will have an impact. That's the Reserve Bank of Australia, in case you didn't know. So it's sort of like the Bernanke over there. And so he'll come on, he'll talk, and that will, of course, cause some volatility in the Aussie. So the Aussie and the yen should both have some good volatility that we can take advantage of on Monday evening. And then pending home sales should give a little bit of a boost just to cause a little volatility as well. And that'll be Monday morning, 10 o'clock here in the U.S. And let's see, what else do we got on Tuesday? All right, Tuesday we have consumer confidence at 10 a.m. Right here. That'll cause a little bit of an impact. It's more of a 30 or 40 pip. It's not like a, sink everything into it type impact. But we do have a whole lot of Euro announcements coming out. So we got to get some great Euro activity Tuesday night, Tuesday early morning, really. Because like at 2 o'clock, you got the German consumer climate. Then you got German preliminary CPI coming out throughout the day. Then you're going to have the Spanish flash GDP coming out at 3 a.m. You have retail PMI coming in at 410. You're going to run over an Italian 10-year bond auction. That's always, interesting to see how that works out. It usually is not a big factor. But if it comes in like a lot better or worse than expected, if yields are rising or if they rise significantly or if they fall quite a bit, then that'll, of course, have a heavy impact on the euro, fears, contagion fears, all that other random stuff that we've been hearing about forever. The results on that, by the way, usually come out around 5 o'clock in the morning, so a little bit after 5 on the Italian 10-year bond auction. So I know most things will say tentative, but again, if you look back at the last ones, it's like 5:12, 5:15, 5:14, 5:13. So around, a little after 5 a.m. is usually when the Italian 10-year bond auction results are released. 8:30, we're going to have some medium impact Canadian reports. Those are 20 or 30 pip move reports, not big. And let's see here, like I say, consumer confidence at 10. And that pretty much wraps up that. You'll also have the yen PMI. So, between the average cash earnings, the yen PMI, the Aussie dollar private sector, again, you got to get some decent Asia trading hours where you can go in on that. We're going on Wednesday, and we're going to have NFP. Yeah. So ADP, NFP coming in, and then the big NFP coming out on Friday. But we're also going to have Canadian GDP and U.S. GDP on 8:30. So that's a straddle, okay, right there. You got the Canadian GDP and the U.S. GDP, advanced GDP coming out. That's a great straddle move. So we're definitely going to be looking at that straddle on Wednesday morning for the GDP. And we have the ADP non-farm employment change. That usually has an impact with it. So we're probably going to be hopping in around 8 a.m. and going for 10 o'clock on the USD CAD due to having both of their GDPs come out at the same time. Ought to cause some great volatility. And who knows what direction that's going to go in. That's why we straddle it. Maybe it'll fly up on one and fly down on the other. Great. Then we'll make money on both sides. But, we just want volatility. And that's a perfect volatility time right there. And you better be aware that if you're trading that morning, that GDPs are coming out on USD and CAD. That will impact, but, indices. It'll impact things like oil. Think about it. So it'll impact lumber and housing. I mean, there's all sorts of stuff that impacts. We go on in a little bit further. We're going to have the Chicago PMI coming out at 9:45 on Wednesday, crude oil inventories. And then at 2 o'clock, we got the FOMC statement coming out with the Fed funds rate. So next week, get ready. Not only to have earnings season, but we got, NFP reports. We got Fed funds rate reports coming out. So it ought to be a really, really fun week to trade with a lot of volatility built into it. And then we'll have the China manufacturing PMI coming a little bit later that night, a couple Aussie reports coming out, a couple yen reports coming out. So that'll add to some nice, evening volatility on the, the Aussie and the yen pairs, the Nikkei, if you have to trade that as well. And so next Wednesday, good stuff. And then Thursday, he's like, you love that volatility. You gotta love it, gotta learn to embrace it. On Thursday, what do we got going on? We got, let's see here. Europe and Britain has some minor reports coming out, but then the PMI for Britain's going to come out at 4:30. So we'll be checking that out, seeing if we can get some good stats on that. If we can, I'll let you know. But then we have the bank rate, the interest rate coming out on the British pound. We weren't able to trade this last time, because on Nadex at least. We weren't able to do a straddle strangle because it came out when Nadex was closed, with July 4th. So we'll be able to hop in, and it moved. It moved nice. So we'll be able to trade the British pound interest rate report. That comes out at 7 a.m. So we can go in there, and there'll be quite a few trades, but you'll have basically the 8 a.m. expiration spreads that we can take advantage of on that trade. And then the rate statement is a little bit after 7 o'clock. It can vary in times. Let me see what's our average time that comes out on that statement. We'll see. Usually they're pretty consistent. So they've been releasing it at usually about the same time. So the rate statement right there, right around 7 o'clock. 8 o'clock is the latest time I've seen it come out. So, 7 a.m. So we ought to expect the rate statement to basically be released at the same time as the bank rate. Maybe a little later, but usually the same time. So 8 o'clock should be a sufficient trade right there. And then, and then We got the minimum bid rate on the euro. And so that's coming out at 7:45. So they're going to have their interest rate also. So, I mean, it is Fed funds rate week. And anyways, we got the ECB press conference coming out at 8:30. That's usually the big mover. So unless they surprise somebody with their rate, which is not expected, the big mover is the press conference at 8:30. So you really want to be targeting like 9, 10 o'clock expirations, I guess 10 o'clock in this case. And you may even have to go with a later one if you want to get in before the minimum bid rate. So we'll look at what possibilities can come up on that. We'll talk about that and lay out a plan. And to be able to straddle the euro interest rates and the pound interest rates and the U.S. interest rate announcements. So all of those coming out. Then we're going to have the ISM manufacturing PMI, and that'll come out at 10 a.m. We got the unemployment claims at 8:30 as well. So just a lot of news coming out this coming week, and I'm pumped. So it'll be a lot of good opportunities out there. And then 9:30 that night on the Aussie, we're going to have the PPI. So if there's any left in the market for it to be able to move, we'll check that one out. We'll get the stats and see how often it moves along with the rest of them. And to wrap it up on Friday. Friday, we're going to have construction PMI coming out on the British pound. That's a pretty important number. And then we're going to have U.S. non-farm employment change, unemployment rate, average hourly earnings, core and PCE price index, price, personal spending, and personal income. Yeah, that's a lot. All coming out at 8:30 at the exact same time on Friday. Do you think we might get some dollar volatility? Yeah. So we're going to look at the straddles and the strangles and definitely have some potential trades right there. And 10 a.m. we'll have like factory orders, and FOMC member will be speaking. PMI come out late at night on Friday, which is useless, coming out from China at 9 o'clock. So anyways, so there's a lot coming out right now. And just trying to see if there's anything else we need to be aware of, but that's a lot right there. Let's see. Oh, I just saw a report come out of New Zealand, of all places. The White House says that Obama is not expected to name a new chairman of the Federal Reserve until the fall. So, lowering expectations of an imminent announcement. He's not made a decision on who will replace him. I'm thinking he's probably going to have that guy Carney, have him go in, the White House, news guy. And, it's like a carnival listening to him. So, just put him up there and let him be the new Fed funds chair. And, if Bernanke's going to be gone, which he's done a pretty masterful, interesting job, however you want to put it, of, I guess, driving through this crisis. And I don't know how much creating it, helping it, hurting it, whatever, but it's at least been interesting. I don't know anybody who could have done better. I don't know if he's done well, because there's nothing to compare it against of anybody who's tried anything like this before. But it'll be really interesting to see what we get next. I'm sort of curious. I can't wait to see the new sideshow that's going to come up. But, so anyways, one person, it was like Janet Yellen might be somebody who's a potential. They'd be the first woman to lead the Fed. So I guess that could be sort of cool. I don't know anything about her, though. I'd have to look it up. I haven't really done my homework yet to see. But anyway, so they're not going to name anybody till later in the fall. They'll save that surprise for you till around election time, I guess. And as they try to see if they can get control of the House and take back control of the Senate, or if they lose both chambers. Who knows? All right, we'll be back right after this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And let's see what we got going on right now. So we got the S&P currently still up to, or down 2 points right now. Let's go ahead and pull up a few charts and see what we might be able to put together. And so we got, 1 second here. There it is. Okay. So I just wanted to look at it and see, somebody asked, do you think this thing's going to keep going? And the number one way I look to see if the market's going to keep rallying is I just check out on the deviation levels. So if we go across and we're just like checking out, look at the 4 indices real quick. And on the S&P right now, we are still up. We have not hit the settlement price yet, so there's a good chance that maybe trying to reach up and hit that 1684. And then after that, just totally pause. We did get quite a bit of a volume spike. You can see right here about 1330 on that last high. So it's trying to see if it can break that, but there is that volume spike there at 230, or what is that, 130? And so it's been consolidating since that point, but very close to settlement. Let's go on over, but yeah, 1684 basically be the target right now. Back on up, and then let's check on over here. We'll look at the Russell. Let's see what we get. We got to move negative 0.5. We have not got back up. We have not filled the gap yet on this last up move. So we moved on down, moved on up. We also got a 130. We got a volume spike right there on the indices. That could actually spell the end. So we're seeing that now on 2 indices at the same time. Let's go ahead and check the Dow. So on the Dow, did we get the same spike? Yep, same spike on the high at 130. Also has not yet filled its settlement price. So acting as if it does not want to. Across the board, the markets do not want to fill their settlement. And let's go down and let's check out the last one. We got the Nasdaq. So how are we looking on in Q? I know it's been a little bit different animal lately with earnings and all that. So it's already been above settlement. And it went in, and let's see, what did it do at 130? At 130, it also spiked on its new high before pulling back. It did hit its plus half deviation mark right there, so it wasn't quite a gap. Obviously, it had the gap fill pretty quick in the morning, but that was more news-based than anything. Filled that, stayed right. Look how it's like oscillated around settlement. I mean, for about, almost 2 hours of just oscillating right there before it pulled back and went on up. And but yeah, I would say with that volume spike, that late in the day, I would say yes, we're done, we're cooked. So RP over there in the Tiger Den, and then just going over, I'm looking at broad market right now too, and let's see here, what do we got on the broad market index? This is a net shares, the New York Stock Exchange. So how many are up for the day versus how many are down for the day? And let me move this back over here. We'll zoom in on the current day. Right there, and so you can sort of basically just track the trend. So, in the morning you got that right there, and then it crosses, making higher highs. So once it does that, we can bring it on up here. So we're just now actually crossing below that. Notice also the net shares did not fill its gap either. See, we never got back to positive territory on the net shares. We got that little run up in the morning. And you can't really pay attention to, I put a moving average on here. You can't really pay attention to it, for the first 8 bars, because you don't really have any bars, okay, because it's looking at yesterday. So you got to give it 8 bars in before you pay attention to it if you put an 8-period moving average on the net shares. And anyway, so once that gets going, we get down here. It's running up. It crosses across that trend line. That's what we see right here, crossing on down. And then runs on back up. And right now, just sitting at that level. So I think with all of them having that spike, we can definitely be done and down right there. All right, we all have a great day, and y'all have a great weekend. Stay tuned. We got another great show coming up for you right after this.
That makes people come up, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.